Welcome back and welcome to Tax Talk with Tax Guru. The host of this set is Prab, and on this good Saturday morning, Prab questions Vikas Garg, CPA PC, about the 20% S Corporation new deduction. CPA Garg's headquarters is located in Ashburn, Virginia. Let's hear this upcoming question-answer session.
Good day, Vikas. How are you?
Good. How are you doing, Prab?
Good. How was your Easter weekend?
It was tax season, so,
So
working in office, and that's all our schedule.
You didn't take any time off?
Come on. It's a tax season for CPA then.
What is the deadline for this year?
It's April 17th, so another 3 days to go.
All right.
And we'll have the vacation after that.
All right. Sounds good. I'm sure you have some plans with the family to get out.
Yes, relax at home next weekend.
So you won't be taking our calls after April 17th?
Few calls, but I'll be sleeping a lot.
Okay.
Catch up for 3 months of tiredness.
All right, sounds good. So today we're going to talk about this new 20% deduction rule that's come, right? Last 2-3 months, I've had a lot of calls for ourselves and our group of companies, and we're an S Corp. So the whole thing is moving from S Corp to C Corp, and will we save that 20%? Still unclear. Do not know which direction to go to, and I'm sure a lot of companies, not just IT companies, who S Corp, are asking you the same question. Can you clarify for us a little bit more on this?
That's the most common question. I'll say 90% of our clients ask, all the business clients who have S corporation. First question, okay, can I go ahead and convert to C corporation?
Right.
So the thing is, answer is, it depends based on your income level, how much income you earn, which industry you are working. So before I say what option you need to use, I'll explain how the C corporation and S corporation work.
Sure.
Okay. Under C corporation, you pay basically double taxation.
Right.
What double taxation means is, whatever the company makes the money, they pay the federal and state tax.
Right.
So let's say you make $100,000, and let's say your tax is $20,000.
Right.
So you are going to pay $20,000 as a taxes. So leftover is $80,000. $80,000 will flow to the shareholder as a dividend income. So when dividends come, they're going to pay another 15% plus 5% state taxes. So overall, when you have the C corporation, you are going to pay around 36-37% taxes. Okay. If you have S corporation, in case of S corporation, corporation don't pay any taxes. All the profit move into shareholder hands.
Right.
Okay. Depending on what type of rates you are in, which tax bracket, you need to pay tax accordingly. So let's say if this is only one corporation which you have. If you have S corporation, you might be on 20% tax bracket. So you'll just pay 20% flat tax. That's all. If you convert to C corporation, you'll pay tax at corporate level, 20%. Then when you get the money at your hand, you're going to pay another 15% dividend tax plus state tax twice. So basically, you are paying 25% at the federal plus state at the corporation level plus 20% at the individual level. So it's going to come approximate 40%. So that's what we did not recommend everybody to convert it. So we have to look how much is your income, which liability you are. If you convert, how much is your total tax liability. If you don't convert, if you keep as corporation, what is your tax liability? So you can't say, go ahead and convert it to C corporation.
Good. So I have a clarification on this. A C corporation, when we take out a dividend, right, we're paying 15%. And with this new total tax liability of 20%, does that mean it's going to add up to about 35% plus my state taxes?
Okay. So with the new rule, what happened earlier, before this new tax reform came, the corporation, let's say, first 100,000 on an average, they used to pay 20%. So on the same side, let's say if you make $500,000 as income. So $500,000 of income, the slab rate was coming on an average 33%, and 5% state taxes. So you are paying 33 plus 5, 38% at the corporation level.
Correct.
And when shareholders are taking distribution, they were paying another 20%. So 38 plus 20.
Okay.
So they were paying the 58%.
Okay.
If the same thing with the S corporation, they were paying maximum 39%. So that was the disadvantage earlier before this tax reform came. They are paying 58% versus 38%. With the new tax reform, your corporation tax rate will be at the corporation level will be maximum 25-26%. Then shareholder level will be around 15-20%.
Got it.
So C corporation rate, or indirectly we say C corporation rate brings down to match with the S corporation taxes.
Got it. Got it. So how do we strategize this, from our profit, right? As a business owner, so I'm looking at my profit, and what's this about the flat 20% deduction from the profit? Can you explain mathematically how would it work?
Okay. So the 20% flat deduction, basically the new administration given some incentives where you can come and take a flat 20% deduction. So how the flat 20% deduction work? Let's say you have S corporation.
Right.
Let's say we talk about any consultant.
Yeah.
Okay. He's working some outside market.
Right.
His bill rate may be 150, 200, whatever it is.
Right.
He's making $300,000 as a salary.
Right.
And that's only one person in the family.
Right.
So his income is 300,000.
Right.
He might be running his W2 and everything. So
Right.
he's claiming all the expenses, W2 out. So he's, let's say, $100,000. He withdraws the W2 income.
Right.
Okay. And then he has maybe 50,000 as expense. So $150,000 is coming as a S corporation profit.
Okay.
Okay. So the deduction will be 20% of 150,000.
Okay.
So you can take direct as a deduction. So you are going to pay tax on 100,000 as a W2 income. Earlier you were paying 100,000 plus 150 as corporation profit. Now you will take 100,000 plus 120. So that's a 30% flat on 20% of the profit.
Okay.
You can take a direct deduction on your income.
Okay, okay. So that is something that everybody can avail to, or is there like an income range, or say for example, the S corporation person's net profit is about $1 million,
Okay.
right? Is there a cap?
Okay. There's no cap basically, but there's a different formula.
Okay.
Okay. So let's say if your AGI, your income is below $315,000 income.
Right.
So there's no cap, you go ahead and take the 20% of deduction. Okay. If your income is above 350,000 as a family, okay, there's a rule is 50% of W2 or 20% of profit. That's the deduction you need to take. Now, at this place, the CPA is playing the major role. You have to do backtracking. Backtracking means you need to estimate how much is your 2018 outlook.
Right.
Okay. So if I ask you today how much the profit, it's hard for you to tell.
Yes.
Okay, how much is your 2018 profit? How much is your 2019 profit? We can estimate it.
We can estimate it.
But things change.
Yeah.
With the industry, profit can go very high.
Right.
Especially with the small business,
Right.
like your IT industries.
Right.
People come.
Right.
They join the full time. The companies are coming today. You are on 1099 contracting.
Right.
Your project laid off.
Right.
When you're going for next project, they're saying, no, you need to come as a full-time employee.
Right.
So you can't predict what's going to happen.
Correct.
Okay. The best thing how you should do it, make them salaries,
Right.
whatever reasonable.
Right.
Okay. And estimate at the year end. What is my profit? What is my salary? You can adjust the bonus. Nobody can stop you to taking the bonus.
Got it.
Okay. So the moment you say the profit is $1 million. Okay. So let's say the person who has $1 million profit, he let's say is a 2-3 employees or something, he might have withdrawn $100,000 as salary.
Right.
Okay. The rule will apply to him like this: 20% of $1 million, that is 200,000,
Correct.
or 50% of the salary,
Okay.
so 50,000. So whichever is lower.
Whichever is lower.
Okay. So when you look the 50% of 100,000,
Right.
50,000, 20% of 1 million, 200,000. So even if you're eligible for 200,000, you'll get the deduction of 50,000 only. The best approach is you bump up your salary at the year end with the bonus. So let's say other way. If you go and take your bonus of 200,000, you can, nobody can stop you. You're on a corporation, you can write a bonus check at the year end. Okay. So your salary will be 300,000. Your profit will be 800,000 because you take the bonus and as a deduction. So if we apply the same formula now, so it is 50% of your salary, 150,000.
Correct.
Okay. 20% of profit, 160,000. So now your deduction will be 150,000.
Got it.
Earlier it was 50,000.
Got it.
So by doing the right approach,
Right.
just talking to your CPA in advance, what strategy I should use,
Right.
you just reduce your income by 100,000.
Right.
And that itself is a 30% tax saving. You talk about $30,000.
Right.
It's just a proactive approach.
100%. It's a huge saving, and a lot of us. So I was thinking before this session that I was going to ask you. So cutting my income and then going all profit, that's not necessarily going to add value to this.
It's again depend how much is your income.
Right.
Okay. When your income below 315,000,
Right.
there's no salary formula.
Right.
When your income is above 315,000,
There is.
there's a salary formula.
Right.
Okay. So the question you just said, no salary.
Yeah.
Right.
Yeah.
So if I say I have only $300,000 salary.
Yeah.
Okay. So do I need to pay the taxes on this or not, or I just take as a full S corporation distribution? The law still requires you to pay reasonable salary.
Right.
Okay. You cannot go back and take everything as a S corporation profit. Law will not allow you.
Right.
So make sure you are doing the reasonable salary at your end.
Okay. Okay.
Okay, and then make the profit distribution.
Okay. Okay. So can what about the as an employee? We have a lot of employees, right? And will they all start to avail this? Can they avail this on a 1099 employee basis? Can they start doing as corporation to avail this tax benefit?
This is one of the things we told many of our clients this year. If they are W2 employees, they were asking, how can I claim this 20% reduction? Answer is, they can go and talk to their employer. If they are ready to convert as a corp to corp, or they'll be as a treated as self-employed. So if you are just a W2 employee, you'll not be able to get a 20% reduction. But if you convert yourself as a corp to corp or 1099 employees, you'll be as a self-employed. And you can open an S corporation. When you bring this thing on table, you can take a reasonable salary again. So that reasonable salary definition is subjective. It depends on how things work.
Right.
Okay, and then you can bring the 20% reduction.
How does this then help the base employer to say, for example, these employees will come and ask the employer, like me, Prab, I'd like to convert to an S corp because my CPA said I'm going to save some money.
We
right?
are giving you a hard time there.
Right. Yeah, so how do we? Does it benefit us in any which way? Because we're going to write this as an expense anyway, right?
Okay.
Even in an S corp, we're going to give 1099, and it's an expense for us, which is even if they're a W2 employee, they're still an expense for us.
That's correct. See, how IRS treats it, you cannot segregate employer versus 1099. You need to have a set rules who can be your employees, who can be your contractor. Okay, if you convert everybody just as a 1099, if tomorrow IRS comes and they treat these people were as a employee, full-time employee.
Right.
Okay, then whatever the salary you pay to those employees, you are going to pay Social Security, Medicare also on top of that. If you're not able to justify they're really contractors.
Right. Right.
Okay, so that's the risk you are taking. So in simple way, I'll say, when we talk to as an individual employee point of view, we are suggesting them convert as a S corporation. Talk to your employer. When the corporation is coming, they're asking same question. Oh, these employees are asking, can we go to corp? Can we go this? We are saying we have to set up standard rules.
Standardize.
Okay, so if just don't convert everybody as S corporation because consultant is asking. No, you may be in trouble.
Right, because there's compliancy factors to what employer has to classify who's a part-time worker, who's a full-time worker,
That's
who's a 1099. So you can't declassify everybody because that's a compliance
consultant
issue.
is asking.
Absolutely, I agree with you. Thank you for that, because when you're telling this, the normal tendency for the employers like, oh, we're going to save on Social Security and Medicare, and this employee is coming and asking us, so let's go for it. But it's not necessarily going to work from a compliance perspective.
You may doing the more damage to your company.
Right, and then past this administration, we don't know if they repeal this again, right? And if they repeal this, then you move back, so you undo everything that we did, right?
Yes.
Yeah. Okay. Okay.
So I don't recommend that part. Yeah.
Okay, okay. Now, can anybody, just as a closing thing, I know we're running out of time, but can anybody avail this S corporation? All businesses, IT, non-IT,
So
entertainment?
the rules are applicable for every industry. Okay, but for the personal service corporation like CPAs, doctors, attorneys, has some restriction. If our income, like all these segregated group, if the income is below 315,000, they are eligible for 20% reduction. The moment they touch the income threshold, they are not allowed.
Okay. And type of companies like your
As
type
corporation, yeah.
Okay. So can a lawyer, my lawyer asked me this, can they also avail this 20%?
As long as their income is below the threshold.
Okay. So as long as their income is below the threshold, they can avail it.
Yep.
Well, thank you for your time, because I want to talk more about meals and entertainment, but we'll do that for the next show, next
Sure,
week.
I'll see you next week. I'll be free after the tax season, so.
Thank you so much.
Sure, thank
good
you.
luck with your tax season,
Okay, thank
and
you.
Hope you have a good break after
You
that.
too. Thank you.
Thank you.